Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome back to the Investing Podcast presented by Tusk Media. Andrew Hall here, Ben Nye there. If you're listening on iTunes, give us a subscribe, and we should let you know on iTunes we're talking about Apple today. So keeping it all in house. If you're watching on YouTube, we're still talking about Apple. If you're reading this article on Seeking Alpha, still talking about Apple. Here we are. We're going to jump in real quick. Follow us on Twitter at Tusk Media LLC. Shoot us a DM. We'll send you one of these bad boy Narwhal Tusk Media stickers. Got headphones on. The headphone also looks like an exclamation point. I don't know if you've ever noticed that little hidden gem right there, right in front of you. But we're going to talk about Apple a little bit and some of the challenges that Apple is going to face, kind of on a macro and developmental level. Not the least of which is their dependency on the iPhone, kind of a product challenge. We talked about this recently in a portfolio management meeting. We're reviewing a lot of our holdings. We own a lot of Apple, so it's certainly on the list of things that we're taking a look at the end of the year. And kind of the conversation really centered upon how do they replicate and maintain the success of the iPhone, which I think a lot of people would note is the most successful product in history, period. When you think about the scale of it, the margins of it, the utility of it, how many people have it, I mean, it's so unbelievably prevalent and has so much ingrained itself in our culture, you kind of wonder what's next. Can they replicate something like that? So Ben, we'll kind of jump in right there.
Yeah, it's interesting. So when you look at iPhone as a percentage of Apple revenue, it's just incredible, but that actually underrates iPhone as percentage of Apple's profit because it's such a higher margin product. So I mean, you think about the iPhone big picture, and even if you're renewing only every 3 years rather than every 2 years, you're still talking about $250 every year if you amortize that, and that you're paying on one product. And when you take a step back and you think about that, it's like, what do you spend $250 on the same product year after year after year? It's like, automobile, you probably spend a good chunk on insurance, real estate, healthcare. But apart from that, like those are the big buckets, and food. But food, auto, insurance, real estate are not high margin businesses.
No.
Healthcare, you can make a case that it could be a high margin business, but even then it depends where you are in the healthcare space. So and technology, you certainly don't buy a laptop every 2 or 3 years.
No.
At least I don't. You think about where that next growth is going to come from with Apple, and it's difficult to really pinpoint what is going to be that next product. And I think it's not going to be a single product. I think it has to be a multitude of different services. But that takes a long time to build, and you've seen impressive growth, but as far as Apple is concerned as an entity, it's such a small portion that it doesn't move the needle for a while. It's still, if you have a bad iPhone year, that's going to completely overwhelm any growth in services that you have.
And that's kind of one of those challenges. We've talked about Apple. We don't feel like they're necessarily... I think I would say they're an innovative company. I wouldn't say they're necessarily a creative company. And what I mean by that is you look at the successful products over the last couple of decades. The iPod was not the first MP3 player to market. The iPhone was not the first smartphone to market. The iPad was not the first tablet to market. Their laptops and their computers, they weren't the first laptops or computers, and when we're talking about, kind of the recent iterations. So when you start to think about, okay, well, what can match or replace an iPhone, especially as we do start to see a little bit of a slowdown on the iPhone, or at least a slowing growth rate on iPhone sales, things like that. When you start to think about what can replace it, you really kind of come back to the drawing board of, okay, well, what's out there right now that's not already perfected? And does that fit a bucket like an iPhone where people are going to spend, basically an amount of, $20 a month in perpetuity on this, and it's going to create a huge margin, and there's just not really anything there. So it seems like right now they would have to truly create something.
I mean, for example, like you look at virtual reality, and I'm not sure how much they're making on virtual reality, but I'm pretty sure it's not high margin business. So even if you say that a virtual reality system costs a manufacturer $200 to make, I mean, you still need to sell that for like $1,400
Right.
if you want to do well on it. And you know Apple's gonna want to make the premium product. It's not gonna cost them $200. It's gonna cost them significantly more than that. So it'll be interesting to see how that develops. We talked about some ideas in our portfolio management meeting, and we're getting increasingly futuristic, and things like wearable shirts that constantly monitor that you can subscribe to, or potentially even like diodes that you can swallow.
Yeah.
and measure. But again, that's a different market than what Apple's core competency has been. I mean, they've never done really anything that's been big without a screen on it.
Right, and that's kind of the challenge too. I think if you look at Apple, I wouldn't deem the iPad on near the same level of success as the iPhone.
Yeah.
I think every iteration of that has been relatively disappointing relative to what this could have been in terms of sales, in terms of numbers. The Apple Watch seems like it would be a fantastic repository of data, but the adoption rate of that is, I think, surprisingly low. I mean, for every X iPhones, how many Y watches do you see? Not very many. So I think that's the other challenge they're facing, is their last couple new products, so to speak, have not necessarily blown the door off. And I think like Smart TV, for instance, was something that we talked about in the PM meeting. I think they could have rolled out a really fantastic Smart TV 2 or 3 years ago, talking about an actual device. But now the cost of that technology has come so far down. We just bought a Smart TV in our office. I don't even know what brand it is, Samsung, Sony, something, and it was like $400, and it's a 48-inch Smart TV. It's got the apps, all that. So it becomes really difficult for Apple to sell something for 5 times that price, or to sell something for the same price and get those margins they want.
Right.
They're kind of in a rough spot, and I think they're also in a little bit of a challenging spot geographically in terms of what they're expecting for growth internationally. Wouldn't you agree?
Yeah, so I mean, you look at, if it's not going to come from a new product, growth's not going to come from a new product, then it has to come from existing product by either moving price points up or expanding into new geographies. But if you look at pricing has declined this year in a 7 cycle, which should be a higher pricing cycle. You looked at the iPhone 6, that was a huge upgrade cycle. Pricing declined this year for the first time for 3 years. So that was not a good sign. You also look at Apple revenue by region. They had a huge growth in China last year, but that growth is now, it's declining on a year-over-year basis now. So China had that huge excitement about, everyone's buying these iPhones.
Right.
and now they're not doing it in as much volume. So it's difficult to see where that growth is going to come from organically. Now, they do have a big, stable business. I mean, I don't want to take anything away from what Apple has built.
Like all credit due for creating this problem of how do we replicate the greatest product.
Yeah.
They still have it.
Right. But if you're modeling them out, so I did a discounted cash flow analysis on them, and it's stylized to a certain extent, but it gives you an idea of what you have to assume in order to project higher and higher prices for Apple. And as I was thinking through I think the base case has to be that iPhone becomes more like a PC in terms of annual growth. Maybe iPhone will still grow, and I'm assuming that it'll still grow at a low rate, which is actually better than the PC.
Right.
But to forecast much more than that, I think is ambitious and highly optimistic.
So, with this stock, again, large holding for us, we're kind of in an evaluation period. Trying to kind of refine potential outcomes. Again, the iPhone's the best point of data we have right now to kind of do analysis. What's your personal stance? Hold, trim?
Yeah, I mean,
equal weight?
I peg fair value around $99. But I would be reasonably aggressive to buy in the low 90s because they do have a large cash balance. They do pay a dividend now, and they have this big free cash flow yield from the iPhones that they still sell quite a lot of. So I'd be pretty aggressive in the low 90s. I think it's about 110 right now.
Yeah.
I'd be looking to trim, maybe sell some calls on it. Again, sell calls won't predict you on the unlimited downside, but they'll generate a little extra income for you if you don't see the upward growth momentum for the stock.
Yeah, and I think, again, kind of as you mentioned, it's solid company, good company, incredibly strong balance sheets, generating tons of cash flow, strong product line. So there is a point where this becomes attractive kind of through a slightly different lens.
Yeah.
But in terms of this upside, we're not necessarily seeing it right now. So there's your challenge, Apple. Prove us wrong. While you're out there for Christmas, buy everybody an iPhone and download our podcast on it for them so that they have that. Also have them leave a 5-star review. That would help us out a lot. This is the Investing Podcast. Thanks. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.